Welcome back to the Deep Dive. Today we're steering straight into India's maritime defense powerhouse, Mazagon Dock Shipbuilders Ltd. MDL.
Yeah, and we've waded through quite a bit their latest financials for Q2 and the first half of FY26, investor decks, the whole earnings call transcript.
It's a lot to unpack.
It is, and this isn't just about numbers. MDL's hit this major milestone, 250 years, can you believe it, since 1774, plus they just got that Navratna status.
Quite the legacy.
Absolutely. So what we want to do for you today is look beyond just the recent results. We need to understand how they're shifting gears, really, preparing for this enormous pipeline of work coming down the track. We're talking billions in defense and, interestingly, commercial orders too.
Okay, perfect setup. Let's dive into those financials first. Q2 half-year ending September 30th, 2025. What are the headline figures?
So standalone Q2 revenue from operations came in at 2,929 crores. That's up about 6% compared to the same quarter last year. Steady growth.
Okay, 6% year-on-year. What about profit?
That's where it gets interesting. Profit before tax, PBT, was 939 crores. After tax, PT, that's 715 crores.
Pretty healthy numbers.
Very healthy. But the really eye-catching thing is the sequential jump. Compared to Q1 of this year, PBT was up a massive 66% and PT jumped 71%.
Whoa, okay. A leap like that usually points at something specific in the quarter, right? But you mentioned the overall first half numbers were actually a bit lower than the previous first half.
Exactly. That seems counterintuitive, doesn't it?
It does. So why the dip over the longer 6-month view, but the surge in Q2?
Right. This comes down to some significant accounting provisions MDL made earlier. We're talking about 1,000 crores booked back in Q4 of FY25 and Q1 of FY26.
1,000 crores. What kind of provisions were these?
They flagged them as being for onerous contracts. Think of these as older, possibly fixed-price deals where the cost to finish the job now looks like it'll be higher than the money they'll get for it.
So legacy contracts, basically.
Yeah, specifically some Coast Guard projects and these multi-purpose hybrid-powered vessels. By taking that 1,000 crore hit earlier, they've sort of, cleared the decks.
De-risking the future, essentially. Taking the pain up front.
Precisely. It means future quarters, like this Q2, aren't burdened by those potential losses. The underlying performance shines through more clearly. That explains the big sequential jump.
Got it. That makes sense now. Okay, let's talk margins. We're seeing these figures, sometimes 25%, maybe even 30%. Is that sustainable for a defense PSU like MDL?
Look, they were quite clear on the earnings call. Those super high margins aren't the long-term expectation.
Okay.
They're partly boosted right now by, well, good execution, definitely, but also by something called liquidated damages, or LD writebacks.
LD writebacks. Can you explain that quickly?
Sure. So if a project runs late, the customer, usually the Navy, can charge penalties. That's the LD. But if MDL delivers successfully later on and maybe those penalties get waived or reduced,
They get the money back.
exactly. It flows back onto the books as income or profit. In Q2, there was a notable €1.2 crores related to the second P-17A frigate they delivered. That gives the margin a temporary bump.
So strip that out. What's the real underlying margin they're aiming for on new work?
They're guiding towards a stable, long-term operational margin of around 12% to 15% for the big new projects.
And 12, 15%, that's considered decent in this sector.
Oh yeah, for these kinds of large, complex, multi-year defense contracts, that 12-15% range is seen as quite healthy and, importantly, reliable. It signals they're confident about managing costs on future builds.
Okay. One more thing on the financials before we move on. Operating cash flow was negative for the first half. That usually sets off alarm bells. What happened there?
Right, it looks odd initially, but the management explained it's purely down to how funds move around.
An accounting thing.
Pretty much. It was because they were using money that the Navy had already paid them into a special flex account back in March 2025. So they were spending cash they'd already received and accounted for earlier.
So not a sign of operational trouble, just using advances already booked.
Exactly. It's about the timing of cash movement, not a failure to generate revenue or manage costs operationally. Important distinction for you listening.
Good to clarify. And finally, for shareholders, there was some good news on dividends.
Yes, definitely. The board approved an interim dividend of €6 per share. Based on a face value of 5, that's quite solid.
When is that getting paid?
Record date was early November, and payment should be out before the end of November 2025. Shows they're comfortable with their immediate cash position, even with big plans ahead.
All right, let's shift from the spreadsheets to the shipyard itself. Operational delivery is crucial, right? That's what builds confidence for future orders. What have they actually launched or delivered recently?
This is really their strong suit. Their track record is impressive. They wrapped up the entire Calvary-class submarine program, all 6 Scorpiones delivered between 2017 and 2025. That's a major program completed.
6 subs, that's huge. And on the surface, ships.
They've been consistently churning out destroyers. 7 delivered since 2014. They keep hitting that target rate of roughly 1 destroyer every 18 months. That's a tempo few yards globally can match for complex warships.
And the big P-17A frigate project, the stealth ones.
That's well underway. They delivered the second ship in that class, INS Udagiri, to the Navy back on July 1st, 2025. It was commissioned in August.
Right, I remember the commissioning. Wasn't there a big triple event earlier, too?
Yes, that landmark tri-commissioning back in January 2025. That was INS Nilgiri, INS Surat, and the submarine INS Bagshir all entering service around the same time, really showcased their output capacity.
So with all that work going out the door, what's left on the confirmed order book as of, say, end of September 2025?
The total balance order book stood at 27,415 crores then.
Okay, 27,000 crores. What's the biggest chunk of that?
Still the P-17A frigates. There are 2 more of those to deliver, and that accounts for about 11,492 crores, so well over 40% of the current backlog.
Any other major components?
Yeah, there are also some significant ONGC projects outstanding, around 4,800 crores worth.
Ah, the oil and gas work. That has specific timing, doesn't it?
It does. Because it's offshore work, they can really only execute effectively during the non-monsoon season. So think mid-October to mid-May, roughly.
Which means it's a bit seasonal in terms of revenue recognition.
Exactly. That constraint highlights why the steady year-round defense contracts are so vital for their base load and consistent revenue flow.
Okay, so that's the current confirmed work. Now, let's get to the really exciting part, the future pipeline. That 27,000 crore backlog is solid, but everyone's focused on what comes next. We're hearing numbers potentially topping 200,000 crores in total opportunities.
That's the scale we're talking about, yes. It's truly massive, and MDL is positioning itself very deliberately to capture a significant share. Let's start with submarines, because that's where the action could happen quickest.
Okay, first up is the P-75 follow-on, right? 3 more Scorpion-class submarines.
Correct, and the news here is very positive. Commercial negotiations with the Ministry of Defense are apparently complete. They're just waiting for the final contract sanction and the actual signing.
So close. And once signed, how quickly can they start booking revenue?
Because this is a repeat order, they've literally just built 6 of these. They expect to start recognizing revenue almost immediately after signing. There's no big learning curve, it's a known quantity.
That's a potential near-term boost then. What about the next generation, the P-75I project? That's a much bigger technological leap, isn't it?
Absolutely. This involves newer tech, probably air-independent propulsion, different weapons. Commercial talks for P-75I are ongoing. They mentioned 2 or 3 rounds are done.
And the timeline for signing that one?
MDL is hopeful of getting that contract signed before the end of this financial year, so before March 2026.
But revenue won't start immediately, like the follow-on P-75s.
No, they estimate about a 6-month preparation period after signing before they can really start booking significant revenue against P-75I.
6 months prep. What goes into that? Is it just design work?
It's more than just blueprints. It's finalizing the detailed design, especially integrating any new foreign tech or systems. It's locking down suppliers for new equipment, sorting out subcontracts, maybe even some specific infrastructure prep at the yard for a new class. You need all that nailed down before you start building.
Makes sense for a brand new class. Okay, shifting from under the sea to the surface fleet. The landing platform dock, the LPD project. That sounds enormous, potentially 35, even 40,000 crores.
It is a huge opportunity. And MDL's approach here is, frankly, quite clever. They've teamed up with a private player.
Teaming up, how does that work?
They signed an exclusive MOU, a Memorandum of Understanding, with Swan Shipyard, specifically their entity SDHI, to bid for the LPD project jointly.
A public-private partnership bid. Why go that route? What's the strategy?
It's smart resource allocation. MDL leads the bid, bringing their expertise in project management, complex systems integration, weapons, the high-end stuff, but they leverage Swan's very large physical infrastructure, which is well-suited for building big ships like LPDs, around 200 meters long.
So MDL doesn't have to build a giant new dock just for this project?
Exactly. It lets them compete effectively for the LPD without tying up their own capital or diverting focus from their other massive infrastructure plan, which is the new Greenfield Yard. It's about using existing capacity efficiently through partnership.
That ties things together nicely.
Hmm.
Okay, LPD is huge. P75I is next gen. What else is in this mega pipeline? Any other big RFPs, requests for proposals on the horizon?
Oh, yes, the pipeline is deep. They expect the RFP for the next batch of frigates, the P-17 Bravo class, very soon. Maybe even next month or by year end. That's estimated at another 50,000 to 60,000 crores.
Wow, another huge surface combatant order potentially coming fast. Anything else?
Then there are the mine countermeasure vessels, or MCMVs. Specialized ships, but still a massive project, maybe 40,000 crores. The RFP for that is expected maybe February or March 2026.
So frigates, mine hunters, it covers a lot of naval needs.
It does. And looking even further out, there's talk of next-generation destroyers, which could be in the 70,000 to 80,000 crore league. The scale is just immense.
It really paints a picture of a decade-long modernization cycle for the Navy, and MDL wants to be at the center of it.
That's clearly the plan. Their current execution is basically their audition for these future mega deals.
But MDL isn't just looking at the Indian Navy, right? You mentioned diversification. What's happening on that front?
Correct. Two major strategic moves here. First, the international expansion, acquiring Colombo Dockyard in Sri Lanka.
Is that deal done yet?
Not quite finalized. They're waiting on the last few approvals, but expect it to close very soon, maybe early next month.
And the cost? Is it a huge outlay?
Relatively manageable, actually. Around 450 crores is the estimate for potentially getting up to 100% ownership.
So, not breaking the bank. What's the goal with Colombo? What do they want to do there?
Get into commercial shipbuilding and, importantly, ship repair. Ship repair is a steady, high-margin business. Their plan is pretty ambitious. Take Colombo's current revenue, about 1,000 crores, and grow it by 50% in just 2 years.
That quickly diversifies their revenue stream away from purely Indian defense contracts?
Exactly. Reduces dependence on government procurement cycles. It's a smart strategic hedge.
Okay, so Colombo is the near-term commercial repair play. What's the long-term, really big vision on the commercial side?
That would be the Greenfield Mega Shipyard planned for Tuticorin in Tamil Nadu. This is a massive undertaking.
Greenfield meaning building from scratch.
Totally from scratch. It's tied into the government's Maritime Amritkal Vision 2047. They're aiming for a huge capacity 1 to 1.5 million throughput. That requires a massive land parcel, something like 1,000 to 1,100 acres.
That sounds incredibly capital intensive. What's the total investment plan?
Over the long run, across several phases, they're estimating 15,000 to 18,000 crores. That's huge.
And near term, what's the initial phase cost?
Phase 1 is pegged at about 5,000 crores over the next 3 to 4 years.
Now I see why they wanted to avoid CapEx on the LPD bid using the Swan partnership. They need that cash for Tuticorin.
Precisely. Every crore counts for this long-term vision.
What kind of ships will Tuticorin build? Is it purely commercial?
Primarily commercial, yes. They want to build very large crude carriers, VLCCs, those massive oil tankers, up to 300,000 deadweight tons. That puts them in the global big league for commercial ships.
But could it build naval ships too?
Yes, it's planned as a dual-use facility. The scale would certainly allow for building very large warships in the future, potentially even aircraft carriers should the need arise. It gives them flexibility. So if you pull it all together, you see MDL doing a few things at once. They're cleaning up the books from past contracts, right? Those onerous provisions. They're delivering really well on the current big defense orders like P-75 and P-17A. But the crucial bit is they're laying the groundwork through partnerships like Swan and massive future investment like Tuticorin to bid for that huge future pipeline of over 200,000 crores in naval work and seriously break into the commercial market globally.
It's a really ambitious transformation strategy, moving from being primarily a domestic defense supplier to potentially a diversified global player.
It is. It's a massive pivot.
Okay, so let's leave our listeners with a final thought. MDL have this grand vision, especially with the Tuticorin Mega Yard, aiming to reshape their entire business. The initial 5,000 crore investment for Phase 1 is earmarked.
Yeah.
But think about it. Projects of this scale in India involve huge land acquisition, navigating complex environmental clearances, needing consistent government support. It takes time, right?
It definitely does. Bureaucracy and regulations can be slow.
So the provocative question for you, the listener, is how quickly can MDL realistically mobilize that first to 5,000 crores and navigate all those hurdles to actually get Tuticorin off the ground? Because the speed of that execution will determine how fast they can truly diversify and change their reliance on the Indian Navy. That's the real challenge ahead for them, isn't it?
That's the multi-billion-dollar question indeed. A great point to wrap up on. Thanks for joining us for this deep dive.